Good morning. Good morning. So, continuation to yesterday. Certainly didn't think anything else was going to happen other than some other news come out that could rip the market in the other direction. Anyway, so manufacturing in recession, the news obviously caught the majorities off guard yesterday, as the markets were poised to move up. We didn't expect them to move up a lot, but this bottoming action that was going on for several days and this green bar here, it's setting the stage to move up, and it started to move up. We had gone over the pattern that was forming, and I've condensed this to a 180-minute chart. So just to be able to condense this far enough to see the fact that there's still a void here to the downside, down to 2,900 on the S&Ps. That's where the prior low is. So I know I've got this down here at this swing, but this intraday consolidation right here and the whole number pretty much, I think, is where the downside target is, give or take. So we'll see when it gets down there if buyers begin to step up and some kind of a turnaround. And I suspect at least intraday there will be, just like there was yesterday afternoon. There was a little turn. It doesn't look like much, of course, on an intraday chart, but later in the afternoon there was this downside shakeout that we played, and it didn't get all that far, but yes, I guess no. Where was that yesterday? Oh, right here. Right, we played this pattern right here, the breakdown failure and the 180 reversal, and we thought it could get up here, but the Qs got up to their resistance, and then things just started jiggling around. Didn't make it too far. Anyway, so we look for the same patterns over and over again each day, and we do that in multiple time frames. So now it appears that, these markets probably going down to the bottom of the range. Here's the middle of the range. So we'll see if it holds there. We take it a step at a time, right? Rather than saying, oh, it's got to go down here. Well, what if there's some big reversal here and things start chopping around? We'll see. First downside target right here, and then we'll see what happens. And Qs, this level right here is the first targeted area, 7,600. This showed some relative strength, that it didn't break down as much as the S&Ps did in the Dow, but here it is breaking here this morning pre-market, and looks like it's got to go down to this level here around 7,600. Now, that being said, the other concept that we follow is and use is a greater than 100% retracement. So while we think ultimately it has to go down here, and maybe that happens today because this is now breaking below this resting period, if you will. The greater than 100% retracement concept tells us that when prices retrace greater than 100%, break the low, look for stabilization. Now, that's what happened here. It doesn't mean it's going to rally like it did here. It just means that it's moved quite a bit in whatever this amount of time, right, over several hours, and it's likely to stabilize, and that's what it's doing right now. As I remove some of this, where's my spread it out. You can see the narrow-bodied bar right there. So things are trying to stabilize here in the moment, but, as I said, greater than 100% retracement. Look for some stabilization, and we see, does it really bounce like it did here, or does it go sideways for a while and then next leg down? Dow, breaking lower, looks like it's got to go lower. Right? So as we look to the left, is there anything there? Nope. Price void, right? This is the void. There's nothing here. I see that little stabilization that's right there, but in relation to this topping pattern, that really isn't much to rely on. That markets are going to hold that level. Ultimately, buyers will be looking here, give or take somewhere in here, right? Either cover shorts or go long, playing a bounce, see how far the bounce goes, so on and so forth. Russell looked like it was going to make the turn yesterday. We talked about this potential for a breakdown bar failure, which actually was setting up. This is annoying, this drawing tool here. This little consolidation. What happened here? Yeah, this right here. Right, where it broke down and we got the inside bar, and it actually took it out. And I traded this myself first thing in the morning up to this high, and then waited to see, okay, can it consolidate or move higher? And then the news came out, and boom, all the way to the downside. So again, looking to the left, see what's over there. It broke this level. So go down and look at the next level to see, if that it can hold that level, and it probably stabilizes. And that's what I'm talking about, stabilizing. It went sideways for several hours, and then it's breaking lower again. And they're going to sell order flow. That's the only way they can make money. In the room, guys using YouTube, talking about Ameritrade now going to zero after Schwab went to zero, and probably the rest of them all fall in line. But they sell order flow, right? They sell your order to another market maker, and they get that information to trade against. They're going to fill you, but that's always been part of the business of selling order flow. So if you were going to read their disclosures, right, besides the commissions, which was a relatively small part of their business, they make the majority of their money selling order flow. So yes, they cut the commissions, which have come down drastically from what they were many years ago. Actually still were relatively high for firms like Ameritrade and others, whereas some of them, like a Lightspeed or my firm, what I had, you could come and trade for $4.95 if you were really active, $2.95. And so now those commissions are getting squeezed out completely, and the industry will probably consolidate. So you got to be careful where your account is. Well, your account will probably just get sold to another firm, but there'll have to be further consolidation within the industry as their profits are squeezed. Right? I'm not sure if you're talking, how do we get hurt, George, as far as the commissions. I don't think as long as you're getting filled like you are now, meaning you press the button and you're filled at the price that you believe you should get filled, nothing wrong. Everything's the same. If you start placing orders and all of a sudden the slippage is ridiculous, you're getting hurt. Right? So, that was the game back in the early 90s with market makers. They would open up the bids, the spread between the bid and the offer, and you would be getting filled at some undesirable price, so to speak. TD's not going to go out of business. I don't think, Schwab's not going out of business. Fidelity's not going out of business. Interactive Brokers not going out of business. But this is a big change in the structure of brokerage firms. All right, oil back down to the bottom of the range, right after the gap up on the Saudi news, back down to the bottom of the range where buyers will step up here, and we'll see, and they can hold it here. Now, this recession fears that are popping their head again. Well, you look for more information as far as confirmation of those fears or the lack thereof. And if there is this recession, well, they say manufacturing's already in recession. If we're going to have a full recession, well, there'll be less need for oil, and oil will break down under these levels, and you'll see, transports further breakdown. They was trying to hold here, and now big down bar. So it was across the board yesterday. The weakness that occurred. I guess in a sense there was nowhere to hide, but bonds turned around. From the breakdown when we were talking yesterday that this was a supporting piece of information for equities to go higher, and this was a red bar breaking down, and on the news it reversed right back up again. So kind of a crazy pattern here in a crazy market, and so far inside day. So you want to keep an eye to see if bonds break above yesterday's high, or if by some strange occurrence they start breaking down to the bottom of yesterday's low. Gold, has had this inverse relationship, and that was heading lower. And as things turned for equities, gold turned back up. Now it's pushing up into this resistance. And we talked about the fact that this actually a pullback into this area would be ideal to get long. So we'll see how this all plays out. We still got this mess up above here. We'll see how it deals with this resistance as it comes up here. And silver, broke down sooner, and a little bit of resistance right there to deal with. So, I think we're going to be in for some chop here today. After wide range bars, historically, we get narrow range bars. Now, this is a shock. What happened yesterday, no doubt about that. And we got that nasty reversal, but still a narrow range day chopping around here would be the norm. We'll see how it plays out. That's not a very good chart. We'll go to the futures to look, and you can see the stabilization that's going on here at the moment. So it's not at any support as of yet, but the concept of the greater than 100% retracement, I'm not going to go back to it. You know what I mean. And we'll see how today plays out. But ultimately, after yesterday's reversal, which was broad-based, turn this to a daily, it looks like the markets have to go down, test some support, and we'll see where it goes from there. And this last thing I'll look at here is our internals, which tell us that, hey, there was more put buying, but it should have been extreme yesterday. We talked about this in the room. Why aren't these option traders loading up on puts on a day like this? So there's a little bit of disbelief. You wouldn't think so with a bar like that, but on another down day such as that, this number would be up at 1.5, and that would be more supportive of some stabilization or maybe a turnaround. And so our 5MA is still not poking below this band here. Breadth is getting on the edge of bullishness, and longer term breadth and volume aren't even down to a bullish extreme yet, which takes a while for that to happen. So ultimately, I think unless proven otherwise, look for the markets to go lower and test the lows from August. So that's it from me. All yours, Dan.
All right, good morning. Yeah, what a crazy sell-off yesterday. Can't remember the last time I've seen such a negative reaction to that number. But yeah, it was a bad number. Recession fears. Manufacturing's already in a recession. Yeah, and I read that TD Ameritrade's joining Schwab effective tomorrow, so they jumped on that decision. All right, our opens in the weekly options trader. Now, things looked fantastic yesterday before 10 a.m. So we got caught in this. We're short the 170s, and as Greg said, if the markets look lower, so we'll just take our stop if it hits. BLK, we did a call spread. And shop, actually shop triggered here. Look at this, shop triggered. And the reason I left it pending was because of the rationale of, hey, if this is going to trigger in a weak market, then it's strong. And look what, as the market started selling off at 10 a.m., look at this thing. It broke out at 1 p.m. And then on the pullback, we got our credit spread limits. So we have, anyway, we have a put spread on that. We have the 300s, 290s for this Friday. And we have our stop in place. Our stop is under these bars, which is still far away. Let's hold our breath. Swing trader, alphabetical, ABMD, we're short stock, looks good. Delta Kilo, long stock, and we have our stop in place. Dollar Tree. Dollar Tree actually, yeah, we bought this 2 days ago on this breakout strength. I'll look into that for legging into a covered call. EIX, we actually stopped out at a gain yesterday. I thought I closed it. I'll do that later. FSS, we're long stock. Came in, stop under the base. FTNT, we're short stock. Bounced a little bit into that WRB. And GPI, we're long stock. Nice little bull flag breakout here. Hess, this is our oil stock problem. You know, when we have that bullish gap breakout. Look at all the sectors. XOP, wow. XL, wow. HFC, we're long stock. Still looks great. I mean, look at that bullish consolidation. But you know, things can become a victim of the market weakness. IBM, we met our target on the put spread, and we have a covered call. And I tightened the stop on that. ITB put spread. I noticed Len had earnings, still up a little bit, but gave up $1, the pre-market gap already. Kilo, we have a covered call. Kim, long stock, came in a bit with the interest rates. Oscar Charlie, we have a core trade, put spread and covered call. Starbucks, short stock, that looks great. Terp, long stock, relative strength, looks great. And I've tightened the stop. SRE, we bought the breakout 2 days ago. TYL, covered call. Trex, put spread. Oh, that's an ugly reversal. You know, actually, I moved the stop to break even yesterday. So that one, we're out break even. Close it right now. And that's what I do when the markets, you know, do what they did, looking for shorts and tightening stops. WCG, we're short stock. Whirlpool, put spread, and finally whiskey. Beautiful relative strength. That's a core trade. Looks great. And that's all the opens. Let's look at gappers now. AYI, look at this disaster. Gapping down to, it was sub 105. Wow, you know it's a disaster when your weekly and monthly data doesn't even show. Wow, that's a nice support area, but you know, under here, If this goes sideways a couple days and can't bounce, this poor thing, this is a fluid move right here. And so there's very little support. TSG, I'm not sure what's going on with this. Big old pro gap, 20 bucks. Now, I mean, the gap's too big. What do you want me to do with that? But if, let's say it were gapping just over this hump, then it would have been a good 30-minute high trade. ATB at a downgrade today, 5161, gapping under this. Could be a day trade short. Exxon had some news about weakening earnings. I think this was earnings, but it trades like garbage, so no interest. Unfee earnings, 8. Now, but for today's earnings gap, this would have been a great bottoming pattern, which today is Wednesday. We have MT live on bottoming patterns using multiple time frames. And this looks like, Alex, what's that one that here, I had it posted, let me find it. Oh no, I didn't post it yet. Yeah, it's glue, and the other one I like better. Here, I'm gonna find it right now. Well, let me go through the rest of these. That's a nice big old W bottom. That's S-fix, but gapping under it. Look at that, earnings. If this were opening flat, for example, look at the nice volume. So talking about shocks, there was a lot of commitment yesterday in that bar. Like somebody had news leak that there was going to be good earnings and they got burned. But that's a bearish gap now. RPM, that would have been a bullish breakout. That's another look, bar by bar analysis. That was a look, it opened, gapped up a little bit yesterday, wide range breakout bar, and just got slammed back into support. No, it wasn't Irvin. It was a new core trade. Here, I'm gonna find it right now. That you said you pulled a McGraw and you went in early. Here, I'm gonna find it. Because I loaded it up. TEN, T-E-N. Yeah, look right here. Here, I'm gonna post it right now. This is the exact description I had yesterday. All right, but so look, this is a beautiful example of multiple time frame bottom fishing. Big old blast, got the 20 and 50 up, a bull flag, nice controlled pullback on the weekly price void. And so you see what I wrote there. If it can take out yesterday's high, then it's only going to happen if it's strong. That's a fact. Lima Whiskey, what are you doing? Nothing, you're flat. Len earnings, but you know, no pattern. AYI 10, that's the one we already looked at. There's the 10 from yesterday. I would have got to it. And there's your glue. Glue's not bad for a swing trade. It's not a core to me because I don't like this big old wide range breakdown bar, which you see here occurred on a gap. There's our NVIDIA, Mealy. Xilinx, that was a beautiful short yesterday, and we just had a stop too tight. Pizza's trying to bottom on many time frames. Spot got an upgrade, I think, but there's no pattern. These are yesterday's watch. VMware had a gap. Can't tell where it's opening, but still, as long as this holds, you know, and doesn't fill the gap totally, I like that as a put spread. MKC could be a put spread. Yeah, we'll keep an eye on all these brokers. They're in action. Bots was a nice setup yesterday. X, it could be trying to bottom. You know, I like this gap reversal and support. It just needs to heal a lot more. Tango Whiskey. Z's holding. YouTube's asking about Whirlpool. We actually have what strikes. Our open position, you know, just knowing our style, it's going to be way down here, but let me give you the exact answer. Whirlpool, I'm kind of posting this just for the YouTuber. So we have the 146, 140. And, you know, this is what we do. We find support. Look at that. That's 146 and a half. And there you have it. Just like that's our factory work. All right, so I'm done with that. Let me go ahead and post this 10 TEN. All right, you know, market basing at the lows here, but maybe trying to hold. Yeah, to me, the dailies still look lower. Oh, I noticed this DXC triggered yesterday. So that's a new open. Uh, 29.16. Wow, so we're up $1.50 already. So it's time to move stop.